Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, we just got CPI data out, so some big news has just broken on the markets. Markets are rallying off this news, although I do wonder how suspect these numbers are. Remember, BLS numbers have been shady for a while and likely to become even more suspect over time as more political influence gets inside of them. All right, but the bottom line is CPI data came out essentially in line with estimates. Let's take a look right now. CPI year over year coming in slightly better at 2.7% versus the 2.8% expected. Month over month, 0.2% was in line with estimates. However, core, this is important, guys, core CPI, which is minus food and energy, so taking out the volatility of food and energy, and we know that oil has fallen precipitously over the last month. That came in slightly hotter than expected at 3.1% versus 3% expected. And lastly, CPI month over month came in, again, this is core, at 0.3% as expected. So what we see here, folks, is that if you remove oil, if you remove some of the other energies and food, CPI, again, kind of in line with estimates, maybe a creeping bit higher overall. Now, markets liked this data, right? If we flip over to the S&P chart, the futures chart here, we can very clearly see that we do see a move up in the price in the futures. So big push up right here. Now, there is something that I want to bring to your attention, guys, and I think this is something that we have to continue to monitor. So the first thing is, if you look at these numbers, and again, just take a look at this. Just before the number, we saw the futures going up, right? 1, 2, 3, 4. That's 40 minutes prior to the CPI data, guys, coming out and being released. We saw buying pressure coming in. Now, to me, that tells me insiders got this number ahead of time and were buying the futures. All right, so they were buying, they knew the number ahead of time, and they were buying the futures up. And again, this is something we've seen more and more recently, where ahead of big announcements or data, there is a leakage going on where individuals are getting these numbers and trading illegally, yes, but again, will it ever be prosecuted? My guess is no. But again, making literally millions, if not tens of millions of dollars on this data release. Now, we are seeing a little bit of a fade here, and I would argue that if you look at the data, it wasn't that the data was great, it was that it wasn't horrendous. And I do wonder if we'll see a fade on the markets like we've seen so many days over the last 2 to 3 weeks, where we see a gap up and then the markets fade all the way back down to the flat line. In fact, we saw that yesterday. If we flip over to the daily S&P chart, we saw again yesterday a gap higher, small gap higher, initially a push higher, and then a fade to the downside. And the S&P yesterday closing down 0.25%, continuing to form that bear flag formation. And again, the bear flag formation is something that we do want to keep an eye on here. We can see there's an underbelly kind of trend line here, and then more of a flat top right up here, creating a wedge within the or around the bear flag formation. Now remember, on a technical analysis basis, what negates a bear flag? Any daily close above the high of the start of the bear flag, essentially the flagpole, right? So you never see a flag that goes beyond the flagpole, right? Here's your flagpole down, right? And here's your flag kind of whistling in the wind, if you will. And again, any close essentially above 64.28, that would then be negation of the bear flag. In addition, you have the parallel trend line right up here, which continues to denote the major resistance that so far has capped the market. Okay, so that's a key little insight into the S&P and where we stand. By the way, the S&P right now is slated to open up about 25 points higher, and yesterday we were down 16, so we'll be net positive by about 10 to 15 points. Again, interestingly enough, that would put us essentially back to the highs on the S&P from yesterday, really not above that. We'll see where we go throughout the course of the day. The US dollar is having a minimal reaction to this data today. You can see again the dollar is flattish, maybe slightly lower. Nothing going on there. And the 10-year yield, this is interesting, guys. So this tells me that initially people read this number as the headline number. So the headline number was a little bit better. It was the CPI year over year coming in at 2.7% versus 2.8% forecast. But then the core is kind of making people say, oh, wait a minute, something's up here. And you can see that. Why do I say that? Well, initially on the release, the 10-year yield fell, which is what you would expect. If you get better inflation numbers, it means the Fed is more easily able to essentially cut rates, so rates come down. But then look, we went all the way down here, and the market has rallied back up on the 10-year, which means people are now saying, wait a minute, first of all, do we trust these numbers? And second of all, wait a minute, the core is actually slightly hotter. So you got a slightly better number on the year over year regular number, which includes food and energy. And then when you subtract that, and look, 10-year yield pushing back up, guys. And by the way, as we're doing this, we're seeing the S&P futures coming back in a little bit more. Take a look at the ES. So we are starting to fade already this morning. Okay, so that's where we stand on that front. The next portion here I want to do is go through some key charts that are making moves today where we have trading opportunities. And every day I try to bring alpha. Where am I going to be looking to trade these stocks that are moving in the pre-market, whether it's on earnings or other data? And again, generally these are great levels. We trade them every day in the live day trading room. All right, so first one, we're going to start with a more of a swing trade. This is on Tesla. Tesla is again a chart that had a wedge pattern. We closed outside of the wedge pattern. The only thing I could say here is this was a weak close. Now, it's still a potential breakout of the wedge, which is good, but you really want to see confirmation here. Confirmation would be a close above yesterday's high today. The reason that's key is because look at how yesterday we had this great move up outside of this wedge pattern, and then we pulled back quite a bit into the day end. Now, again, in general, when you have a breakout, you want to have a close near or at the highs of the candle. That shows continued strength in the breakout. So today we are seeing Tesla up today, but if you really want to see this have a massive move up substantially, you need to see a close above 347 today on Tesla. That would be very, very bullish on the breakout. It would confirm the wedge breakout. And again, we could be looking at a move up to 400 on Tesla on the chart. So great move on Tesla. But again, let's see what happens today on this chart. Another one catching my eye is MP Materials. This is a rare earths player. This candle yesterday, can anyone name this candle formation yesterday, guys? I've shown it to you guys on Bitcoin. If you do know it, that's fantastic. This is called a topping tail. Now, a topping tail is a bearish reversal candle formation. It again means that you have a big move up to recent 52-week highs or all-time highs, in this case, all-time highs, and then the price reverses and closes in the lower 25%, which is what this did. Now, this tells me that until proven otherwise, probability tells me you have a top in this stock at 82.50. It also tells me that while you could see a retrace inside of that topping tail, the odds are for an eventual rollover and move to the downside in MP. All right, so keep an eye on that. That looks like a good swing short here for a move to the downside. Another good potential swing trade here is a bear flag formation or potential head and shoulders formation on CCJ. This is Cameco Corporation, a uranium miner. And certainly one of the things that caught my eye here is not only the resistance line, look at this beautiful resistance zone here, which we tagged, but also look at the potential head and shoulders pattern right here, right? So there you have it. If we roll over and we break the neckline, which is right around 72, you should do a measured move down to approximately 61. There's a big gap fill right down there. All right, so again, beautiful little formation. Also, you can see the big wide range red candle here to the downside. This would be considered an in spirit of bear flag as well. We'll watch to see where that goes. All right, couple stocks that are moving this morning. We have SEC Limited, big move up on this from closing around 146 yesterday to a move up to about 167 today. If we look at the daily chart, we can see that there is a gap fill around 168.50. I don't have the confidence to short that. However, if aggressive traders are really looking for an opportunity here, the level is going to be 172.50. That's a double top pivot high from right here. Now, if we zoom out on this, where else could this go? And you can see, listen, I mean, in all fairness, it's from where it was in 2021. And by the way, look at that rollover in 2021. That is an incredible move down, but it's still, again, I wouldn't be thinking of this as a swing short. And I stress that because of it looking back, this is nowhere near the 2021 highs. So again, day trade, sure, there'll be levels for day trading. I even see some pivot points over here for day trading, but this would have to go up substantially for me to view it as a swing trade opportunity. Circle having a big move up. They reported their first earnings since going public. They beat on revenue beautifully, and so this stock again is jumping. If we go back to the daily chart, it was kind of beaten down a little bit going into earnings after topping out around 300. It was trading as of yesterday's close at 160. Today it's gapping up to 182. First shortable resistance level around 186 to 187. Pivot point in here, there's a gap fill there as well, and another gap fill around 190. So I'd say 187 to 190 looks very interesting for a day trade only opportunity that I'll be watching in the live day trading room. And again, I'll be analyzing this in the live day trading room in real time, deciding if I want to take this with members or not. But again, that's the level that I am focusing on at this point. One sleeper play. I always like to come to you guys with sleeper plays here. This is 3D Systems. It's a 3D printer. This stock has been beaten down. It's only about $150 million market cap or so. This would be one where they had earnings yesterday after the bell. They did okay on earnings overall. That was pretty solid. The stock's only up a few pennies. Keep an eye on this because beaten down like this definitely has. I mean, look at the long dated chart going back to 2021. I mean, this was a $55 stock then. And by the way, if you go back even further, it was a $100 stock in 2013. But what's fascinating about this company, folks, is that they've actually been getting into printing organs. So I read about how they're working with a pharmaceutical company on printing lungs, things like that. Very fascinating. And in my opinion, you combine AI with 3D printing, and you're going to have some incredible innovations in the future. So again, it's a sleeper play. It's one that, again, is a high-risk small cap. But again, if you're looking for potentially that next 10x in the stock market over the next year, that might be one place to look. I do think, again, as advancements in technology get there, a lot of what this company is into is very, very intriguing. And again, symbol on that is DDD. It is very, very interesting. Okay, next up, let's take a look at Regetti. Regetti reports earnings after the bell. So I wanted to touch base on one that's ahead of earnings. Earnings will be after the bell. I've annotated the chart. It's a fantastic chart to educate ourselves on. And the reason I say that is because, look, if this pops about 15%, there's a gap fill at $18.50. And also look at the parallel channel. Look, X marks the spot right up here at $18.50. So that would be a potential short level after the bell on earnings if it pops about 15% to $18.50, $18.60. And then if it falls, and remember, I don't know which way this is going to go. I'm not going to pretend to know which way it's going to go. But can I find my levels ahead of time so that I can react accordingly? And if this were to dump out about 21% on earnings, there's a gap fill here at around 1275, and also the low end of the parallel X marks the spot down here. So going into earnings after the bell today on Regetti Computing, this one certainly has levels that might be tradable in the after hours. And again, always fun to look for trading opportunities in the craziness when a company reports earnings. All right, let's flip over to Bitcoin. Bitcoin, we talked about this yesterday, how you had to be very, very careful with that move up yesterday because, again, it was over the weekend. This was Sunday, and this was early on Monday. And sure enough, you can see, I've talked about this. I think it's so important to kind of take note of. The topping tail high is the dominant force until proven otherwise. So listen, it was a great move from this low, from support at 11,800 all the way back to 122 and change. But does it change the probabilities? Not flipping it. Now, it did change the probability slightly, right? It went from being very bearish here for a rollover to a little bit less bearish for still a rollover, right? So probabilities probably went from like 75% rollover to maybe 65% here. But the essence is it cannot flip in technical analysis. It cannot flip the probabilities to bullish unless you get that daily close above the topping tail. You get that daily close, the bearish signal is negated. And again, it frees it from that constraint, essentially. All right, next up, let's take a look at gold, which had a tremendous drop yesterday. Beautiful fall, getting a small bounce. We know that resistance here has been a thing of beauty. Trend line from October 2024 all the way up. Broke, confirmed, retraced, and rejected at this point. Same thing on this chart. Unless you clear this little necktie area where these two lines are crossing, then this remains with probabilities favoring the downside. It is what it is. Doesn't matter. In fact, I love gold. I wish I could be bullish on gold. I have long-term holdings on gold, right? But the chart's the chart. Like I said yesterday, the charts are in charge. I am not in charge. Okay. Silver. Let's take a look at silver quickly. Silver getting a small bounce. Had a little bit of a pullback yesterday, but overall just chopping. You have resistance up here around 39.65 to 70. Notice the resistance line continues to go up every day a few pennies. So again, if you look at the video from last week, I was saying, oh, resistance is 39.50. But because it's an ascending trend line, it's going to inch up a little each day, and that goes higher and higher and higher. And then on the support side, support remains at 34.65. That is a flat horizontal line, so that support does not change, right? So again, that goes back here to here, and you can see consolidated, boom, and broke out. So retrace to the scene of the crime would be there. All right, so we'll keep an eye on that one. Let's take a look at oil. Oil, which is probably one of the key components why the CPI data was decent on the year over year and month over month when you talk about the overall CPI versus the core. And you can see, again, this was the oil fall just from, really just recently. But again, going back, you can see the bigger drop here and the rollover. And by the way, natural gas, the same thing. We've seen a lot of weakness in natural gas as well. Remember, this trend line here, we've confirmed below. So this is major resistance at $65 per barrel. And the odds now favor, because we confirmed, whether it inches back to the scene of the crime or just goes sideways, an eventual rollover to $60 per barrel for your next big support. And then lastly, folks, let's take a quick look here at natural gas. Again, nat gas, if you take a look at what happened in July, nat gas was down, obviously putting pressure on that overall number on CPI as well from energy. And we can see again that it is still trying to break. And you could say it's below, yes. But again, it was below here, and it didn't confirm and then pop back up. Now it looks like today, maybe if we stay here, it will close below. That will give it an opportunity to confirm. And then I would still be maybe interested in a bounce play at 263. Only a swing trade for a few days maybe, but there might be an opportunity to go long natural gas. ETF-wise, that would be UNG is the ETF for natural gas. That's kind of what I play if I'm going long. If I'm really feeling aggressive, there's BOIL and KOLD, which are multiple ETFs, but very volatile when you get into natural gas because of how volatile natural gas is. All right, so that's where we stand at this point in time, guys. As always, I try to bring the alpha, the levels to you, new insights, new recognitions of pattern, price, and time here at Verified Investing. Remember, our motto is no BS, no narratives, no hype, just the charts. That's it, folks. It's probability, and if you want to be the greatest investor you can be, follow probability. Once we start following our hearts and our feelings, the market is like a shark. It's like we are in water that has chum in it, and the sharks are there, and they will eat us alive. And I've experienced that firsthand. Early in my career, for the first really 5 years of trading, I was just fodder. I was just, meat in the water for the institutional sharks. And so just try to avoid that. Learn from me. If nothing else, just learn from me, learn from my mistakes, learn from my education, and hopefully I can help you avoid some of the pitfalls in trading and investing. You guys have a great one as always. Thanks so much for tuning in. Talk to you soon. Take